Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to answer a common question we get, which is how do I set up an annuity? Today, we're going to talk about how to pick out an annuity, how to set it up, how does the funding happen, and just the effective way of buying annuity. So the first step is finding a place where to buy an annuity. You could go to an annuity broker like the Annuity Expert, which has the largest selection of annuities in the United States. You could go to a bank, you can go to a credit union, you can go to a financial advisor at your, strip mall, big box, retail shops, Charles Schwab, Edward Jones, Fidelity. You could go to an insurance agent and they could sell you an annuity, or a certain type of an annuity. So first you got to pick out your place. Then, the steps really are just number one, defining your goal. Do you want to buy an annuity for growth, income, both? You want to find out if you want to buy an annuity for long-term care purposes or Medicaid purposes or an estate planning purposes. But primarily, most people are looking for an annuity for growth or for income. Then whomever financial professional you deal with, you'll choose between a MIGA, a fixed index annuity, or a variable annuity, or you'll choose an income annuity like a SPIA or a DIA, which we don't particularly recommend because you give up control of your money. If you want to know what a MIGA is an annuity that guarantees a fixed interest rate for a fixed term, just like a CD. A fixed index annuity allows you to earn interest on a fixed rate basis, or you earn interest based on a stock market index like the S&P 500, the NASDAQ, or the Dow Jones, but you're not in the market and you can't lose money to stock market performance. The insurance company just uses the index as a measuring stick to determine how much or how little interest you earn each and every year. And then what you will do is if you want lifetime income, you'll add on what's called a guaranteed lifetime withdrawal benefit, sometimes known as a guaranteed lifetime income rider. And it'll contractually guarantee you an income for the rest of your life or the rest of you and your spouse's lifetime. But you're going to need a financial professional to really narrow down the perfect contract for you. And there's over 1,500 annuity contracts in the United States today. So the worst thing you could do when picking out an annuity is there's a few direct-to-consumer pop-up companies. Good luck if you go with them because you could be hosing yourself, whether that may be a very small insurance company or a lower income or a lower interest rate, et cetera. So there's all these different reasons, but the best route to go is to find a financial advisor, go to an annuity broker like ourselves, or go to a bank or a credit union and buy an annuity. Then the next step is you pick a funding source. Hey, how do you want to pay for the annuity? Cash, IRA, 401k, 403b, 457b, thrift savings plan, pension plan, Roth IRA, et cetera, et cetera. And then you're going to select your carrier once you determine the type of annuity that you want. We recommend A- or better rated companies only with AM Best. And then you'll add on the features that you want, like the guaranteed lifetime withdrawal benefit that I mentioned earlier, or an inflation adjusted income rider, or a long-term care rider, or an enhanced death benefit if you're looking for estate planning purposes. And then what you'll do is you'll submit an application, and the insurance company or yourself will fund the contract. This is the most important part in terms of avoiding scams. So when you fill out an application and you get approved by an insurance company, and that's the key word, is you have to get approved by the insurance company. But once you're approved, never send a check or money or whatever, any funding to the financial professional. So here at the Annuity Expert, we never touch money. If you're going to fund it with cash, the consumer, the buyer, sends a check to the insurance company directly. Or if you're transferring money from a retirement account or a brokerage account, the insurance company will do that work for you on your behalf. So you don't have to worry about that. Specifically, money being lost in translation, or lost in transit, or any sort of taxable event, right? So let the insurance company do the work for you. And then the other option is you can wire the money there, but never send it to the financial professional. It's just, you open up so much room for fraudulent activity. Next question I get about this is, how do you set up an annuity for income? Well, you purchase an annuity of your choice with the guaranteed lifetime withdrawal benefit. Go through the application process. In the application process is you fill it out. It goes to the insurance company. It goes through what's called a Suitability Department, and that's a team inside the insurance company that determines whether an annuity is a good fit for you and for them. So it's a two-way street. And what I mean by that is if you own $20,000 in liquid assets and you use all that $20,000 to buy an annuity, use every last penny you have for a lifetime income, and no insurance company wants to touch that, because if an emergency happens, well, you're in a legal contract and you're going to have to break that contract, and they want to avoid any sort of unsuitable lawsuit that may happen. So just know that there is a team there. There is a gatekeeper to determine whether you're a good fit for an annuity purchase or not. And that's really to protect you and the insurance company. And then once you get approved and you add that income rider, or if you want to do the SPIA route and lose control of your money, you can do that too. You fill out a simple form and you put in your bank account information, and then they start depositing checks into your bank account as if you were still working. Some other questions I get is, can I set up an annuity for someone else? Yes, but it must be structured correctly with the owner, annuitant, and beneficiary roles. So what that means is, if you want to buy an annuity for someone, you most likely would have to be the owner, and the person you're insuring would be the annuitant, and then you'd set up the beneficiaries as you see fit. If you're moving from one contract to the next, it has to be what's called like to like. So when you go from one place to the annuity, the owners have to match up, the annuitants have to match up, and the beneficiaries have to match up, right? Like to like. What are some scenarios where you can set an annuity up for someone else? Parents sometimes want to get an annuity to pass on money to their children, or grandparents want to set up money for their grandchildren. Annuities do a good job for that. If you're terminally ill and you can't get life insurance, you can move your qualified contracts. So your 401ks, your IRAs, your 403bs, your thrift savings plan, your Roth IRAs. You can set that up and get what's called an annuity with an enhanced death benefit, and it'll beef up your death benefit for your beneficiaries. And that typically avoids probate in your state. So it'll go directly to them and not through the estate. So folks do that. Sometimes spouses set up a joint annuitant for lifetime income. So if you have a 401k and you want to use that for your retirement income, you can roll over the 401k into a traditional IRA annuity, and you're still the owner of that IRA annuity, but you're setting up the annuitant as you and your spouse, and it'll pay you the same income for the rest of your life. And then when you die, it'll continue to pay that same amount for your spouse's lifetime, and vice versa. And then whatever's left in the account at the time of both of your deaths will pass down to beneficiaries in a lump sum. Let's see what else over here. Same long-term care. There's long-term care annuities where you can set up you and your spouse's lifetime for long-term care benefits. So two lives for the price of one. And there's some other niche scenarios where you want to set up for other folks, like the Medicaid compliant annuity. So if you've got a couple, one's healthy, one spouse is healthy, the other spouse is not, it needs Medicaid. Medicaid annuities allow you to protect some of your assets instead of going broke. So there's all these different other ways that you can set it up. The point I'm trying to make is go talk to somebody. You don't have to talk to us at the Annuity Expert, but what I can tell you is we will put you in the best possible solution for your scenario, and we'll make sure it's being set up correctly. And to do that, you just need to go to your favorite search engine, Google, Yahoo, Bing, Safari, whatever you use. Type in the Annuity Expert, we'll show up. And you can contact us. Our phone number is 770-755-1565. We'll leave a link in the description here for you to check out. And then leave a comment, like, subscribe. If you got a question, leave it in the comments. We'll answer it. And we'll catch you on the next video. Hope this helped. Talk to you soon.